Right. Okay, guys. Good afternoon and welcome back. Let's continue the class. Still we are discussing ledger accounting and double entry system, double entry bookkeeping. Now yesterday I think I discussed about credit transactions. We discussed about in here, and today, yeah, we discuss credit purchase, right? Revenue of inventory on credit, I told you, credit purchase and credit sales we discuss. And today we need to start with the return, right? Hope you can hear me, right? Today we need to start with the return in here, returning goods. Let's see. Purchase returns and revenue returns. Purchase means we purchase return the purchase things. Revenue returns means customers returning goods. Occur when transaction have been bought are returned to the supplier. This could be for various reasons. For example, let's see what are the reasons that the uh, goods and services are returning. The goods sent to customer not to the correct specification. The goods have been damaged in transit. The goods are of poor quality. The original purchase or sales will have been entered in the double entry system, so the return also must be entered. Purchase return represent that were purchased and are then returned to the supplier on the reason stated above. Example 1, consider purchase return. On April 2017, goods previously bought for 540 are returned by the goods to iGlover. This is shown in figure 6.13. The liability of the business to iGlover is decreased by the value of the goods returned to him. The decrease in liability need a debit. This time in iGlover account, the goods have been into iGlover, so debit the iGlover account. The asset of the inventory decreases by the goods sent out. The credit represent a reduction in the assets in need. The movement of inventory that of purchase return, so the entry will be credit in the purchase return account. The returns have gone out, the credit the purchase return account, right? So iGlover account debit, purchase return account credit. I'll explain it. Revenue return, right? Revenue return, I'll explain it. Revenue return, which means sales return, represent goods sold that are subsequently returned by the customer for one of the reasons stated below. Example 1.12 shows the double entry for revenue returns. Let's see. On 19th March 2017, business received return goods from Lucky Chang. This was previously sold out for 178. Shown in the assets of inventory increased by the goods return. A debit represent an increase and the asset is needed. This time the movement of inventory, that is revenue return. So the entry must be debited to the revenue return account. The goods have come in, debit the revenue return account. The assets is decreased. The double entry of Lucky Chang to the business is reduced. A credit is required. Uh, a, a credit is required in Lucky Chang's account. Record it. This have comes come out of Lucky Chang account. Credit the Lucky Chang account. Right. Revenue returns account debit, Lucky Chang account, credit, right? I'll explain like this. Hope you can hear me. Send me a thumbs up. Right. Hope you can hear me, right? I'm audible. Right. Now, right. Now this is the business. This is regarding stocks. I told you. So business purchase stocks and business sell off stocks. Business can purchase goods either cash basis or another way credit basis. When the business purchase goods on credit basis, the other person we concern as creditor or another word trade payable, right? Business sell the goods on cash basis and also business sell the goods on credit basis. When the business sell the goods on credit basis, other part we concern as trade receivable, debtor or trade receivable, trade receivable, right? And just remember, every time only the credit basis sales are returned by the customer. No, this is customer, right? We sell the goods to customers, right? And also this is suppliers, either cash basis or credit basis, they supply goods. This is supplier, right? And the send customer. And we return the goods, only to the, not every time if the goods are not okay with the conditions, we return the goods, but we return only the credit basis purchasers. Easy, clear to send me a thumbs up. And credit basis customers also can return their goods. Credit basis means when we purchase goods on credit basis, we can return it to the suppliers. When the customers have, we concern from here, when the customers have purchased the goods, our goods on credit basis, they can return it to us. In here we call this as purchase return. This is purchase return. In another word, return outwards. Return outwards. Return outwards. Easy, clear to you guys? Send me a thumbs up. Right. Okay. And when the customer return the goods, we call it as revenue return. In another word, sales return. In another word, return inwards. Why? Return inwards. Why? Inwards? Yeah. when customer returning the goods to us, it is in, again goods coming in. When we return the goods to the supplier, it is out, again goods go to the suppliers out. Understand? And not only that, you know, there's another way, you know, I'll explain it in here as well. Think this is owner. Owner also taking goods. We call it as owner's goods drawings. Think owner also withdraw the goods drawings. I'll explain everything in one. So I'll take 1, 2, 3, 4, 5, 6, and 7 situation. Think our cash basis purchase, rupees 10,000. Credit basis purchase, rupees 12,000. And cash basis sale, think the creditor, we purchase goods on credit basis from ABC business. In here, we sold the goods on credit to XYZ business. So, and we, out of the 12,000 purchase from ABC business, we returned, think rupees 5,000. Think our cash sales rupees 30,000. Credit sales rupees 50,000. Out of the 50,000 credit sales, debtor, the XYZ business returned rupees 20,000 goods. And think owner's goods drawing rupees 2,000. All the things at once, right? I'll draw a chart. Transaction number, dual effect, and the double entry. Transaction number, dual impact or effects, both, and the double entry. Right? Can you hear me, right? Now I told you purchase is an expense. When we purchase goods, purchase expense increase. When we sell goods, sales is an income increase. When it comes to the double entry, right? Let's start with number 1. What is the number 1? You know, cash basis purchase of stocks or the goods. You know, stock asset increase. Stock asset increase. I'll use thousands to write because it's easy for me. I'll use thousands. I'll round off to the thousands. 10,000, I write it as 1,000. 10, sorry, 10. Because rounding off to 1,000. Cash asset decrease. Why? We give cash. Right? So, you know, I told you, though in the dual impact of asset increase, I told you when it comes to debit and credit, we need to concern purchase is an expense. So, purchase account debit. Purchase account debit rupees 2,000. Cash account credit rupees 2,000. Easy, clear to send me a thumbs up. The first one. Right? Understood? Right? Number 2. Cash sale of goods to customers. So, cash asset increase rupees 30,000. Stock asset decrease. Why? When we give stocks, our stock asset decrease But I told you sales is an income increase. So cash account, debit 30,000. Sales account, credit 30,000. Number 3. Now the important parts. Credit basis purchases. You know, stock asset increase by rupees 12,000. Debtor, or another word, trade receivable, or in another word from the business name, ABC business in here is a liability account. Sorry, the purchase. So creditor. So trade payable, you need to pay. This is on credit basis, payable. Or in another word, ABC business. Liability increase by 12. So I told you when we purchase stocks, either cash basis or credit basis, purchase account, debit 12,000. You can write creditor account, or another word, trade payable account, or another word, ABC business account. ABC business account, credit rupees 12,000. When we sell the goods on credit basis, number 4, you know, debtor, or in another word, trade receivable, or in another word, XYZ business. This is asset increase by rupees 50,000. So debtor account, or trade receivable account, or XYZ business account. Debit rupees 50,000. You know, stock asset decrease by 50. So sales account, credit by 50. Don't write early, enough time. Turn on the videos and wait. This part is really important. Number 5, right? No, don't write. Just don't write. I'll give you enough time. No, later. Once I finish it, just listen, right? All things in one big picture. Now this part is really important. When we return goods to the supplier, look here, right? When we return goods to the supplier, you know, when we purchase expense increase. When we return, our expense decrease. Yes, why? When we purchase, our expense increase. When we return it, our expense decrease. But you can't record under purchase account. You need to open a new account called purchase return or return outwards. Understand? For an example, when we return the goods to the creditors, creditor or trade payable or ABC business, liability decrease by rupees 5,000. Stock asset decrease. Why? We give the stocks. But you know, creditor account or another word, trade payable account. Why? When we return the credit purchases, our liability decrease. ABC business, trade payable account or ABC business account, debit rupees 5,000. Credit entry is purchase return account, credit. Another word, return outwards account. Right? If I ask you about purchase return or return outward account, which kind of an account? It is an expense account, but this expense decreases account. Easy to send me a thumbs up. When we purchase goods, expense increase. When we return it good, expense decrease. Send me a thumbs up if it is right. Number 6. When we sell the goods on credit basis, debtor asset increase, stock asset decrease. When the customers return it, stock asset increase. Why? Again, we receive the stocks. By 6 20,000. And but remember, return when we sell goods, sales income increase. When it returns, income decrease. But income decreases as revenue return or sales return outwards. Understand? So stock asset decrease, stock asset increase, we receive the stocks, but you know there is no any stock account, so we write it as return revenue return account or another word, sales return account. In another word, return inwards account, debit by 20,000. If I ask you which kind of an account is this return inwards account, You need to know this is an income account, but income decreases account. Income decrease, it's credit. This is purchase return is an expense account. Expense decrease. When expense decrease, it's credit. Right? So the other thing, debtor, trade receivable, so XYZ business, trade receivable for ABC XYZ business. This is an asset. Why they purchase our goods on credit basis earlier. So when they return it, our asset decrease 20. So you can write debtor account, or in another word, trade receivable account, or in another word, XYZ business account, credit rupees 20. Right. Number 7, last one, right? Owner's goods drawings. When the owner's goods drawings equity decreases by rupees 2000, stock asset decrease. Now, when we purchase goods, our purchase expense increase. When owner withdrew it, our expense decrease. Why? Think we purchase 100 worth of goods. Think we purchase 100 worth of goods. We sell to 120. Our profit is 20. Now owner withdrawing is 100 worth of goods, not the 120, because we give the goods to the owner from the cost price, not from the selling price. When we purchase goods, purchase expense increase. When owner withdrew it, purchase expense decrease. Right? So we can write it on the purchase account. Only that is the thing. Just remember. When we purchase goods, purchase expense increase. So we debit to the purchase account. When we return the goods, we can't credit to the purchase account. We open a new account called purchase return account. But if only when the owner withdrew the goods, we credit to the purchase account. Now, if I write the purchase account, think we purchased 10,000 worth of goods. Out of that, owner withdrew 2,000. But out of this 10,000, think we return to the supplier 5,000. We can't credit it to the purchase account. We open a new account called purchase account, purchase return, right? We credit to there. Can you hear me, guys? Send me a thumbs up, right? Understand? Hello, right? Right? Just remember, when we purchased 10,000 worth of goods, just wait out. Another purchase 10,000 worth of. Out of that, owner withdrew 2,000, right? Return to supplier 5,000. I think these are credit purchases. When we purchase, we debit to the purchase account 10,000 as creditor. When the owner withdrew it, we debit to the drawings account and we credit to the purchase account. But when we return it to the supplier, instead of crediting to the purchase account, we credit to the purchase return account. As we debit to the creditor account 5,000. This is an expense account. This is also an expense account, but this is expense increase account. This is expense decrease account. Just remember like that. Then it's easy for you to remember. Sales also same thing. Now, sell the things are not withdrawn by the owner, only the purchases withdrawn by the owner. Now, when owner withdrew goods, drawings account debit, whereas the credit entry, purchase account debit. Just remember, purchase account, credit. This is the whole story regarding the cash purchase, credit purchase, and cash sales, credit sales, return goods, and owners withdraw. Are you okay up to here? Send me, right? So you can, right? We can develop the scenario for the sales as well. Right? Purchase. Right. Right. Now, if I take the purchase sales account, now you can think like this: sales, write it in sales 30,000. Out of this, credit sales 30,000. Think 30,000. Credit sales 30,000. Out of this, customers return. Customers return rupees 10,000 worth of things. Hope it's really. Now, how we record? Sales. Sales is an income increase account. When we sell this to we 30,000, we write it as debtors. Understand? When the customer's returning, we can't write it in the sales account. We write it as, you can write revenue, open a new account called revenue return account. Right? We can debit to there rupees 10,000. All right, 10 now, 30, 30 and out of 10 as debtors. This is an income decrease account. This is also income account, income decreases account. Just remember, all cash sales and credit sale comes to the credit side of the sales account. All the cash purchase and credit purchase both come to the debit side of the purchase account. In here, cash sales and credit sales come to the credit side of the sales account. Cash sales and credit, cash purchase and credit purchase both comes to the debit side of the purchase account. Out of these, only owner's withdrawals goes to the credit side of the purchase account. Return to the supplier, we need to, and return to the supplier and return by the customers, we need to identify separate. Easy, create, send me the whole big picture regarding all the things to study. Better when you are writing, you can use this side or this side. If you need, you can use this side. Draw the, first of all, draw the whole picture, then write this chart. Take your time, no hurry. Once you finish, raise your hands. If you can't understand anything, let me know. I'll explain it again. Once you finish, raise your hands. Still writing, send me a thumbs up, guys. Make sure to write all the things carefully, right? If there is a matter, send it to the chat box. Hope you're still writing. Send me a thumbs up. Okay, take your time, no hurry. This covers the whole Once you finish, raise your hands. Everything in a proper manner. Give me a thumbs up if you are still writing, guys. Hope you are there, right? Once you finish, raise your hands. Once you finish, raise your hands. me a thumbs up if you're still writing. I'm having a class, another class at 4 p.m. guys. Send me a thumbs up. Any matter? Can you hear me, guys? I go to thumbs up. Are you there, guys? Yasha, dinner. Hope you can hear me, right? Audible. Can you hear me, guys?
Yeah, I can't see the last part.
Writing the last part, right?
Yes, I can't see the last part of double entry.
In here? Oh, this one, right? Yeah, wait, I'll show you. Yeah. I hope you can see he right. Share done. Hope all good, right? Have you finished, guys? All right, okay. Faster. Where are you writing now? Point 6. All right. Last one. Once you finish, make sure to raise your I'll send you a picture, right, to the group as well. Okay, guys. So it's like this because I have another class, right? Yeah, I'll send a picture to the group. Right, I thought of doing other things as well, but thing is, you don't have enough time, right? So I'll send a picture to the group as well, right? So rest of the things I will discuss in next date. Oh, if
Uh,
you yes,
so I have exams on the 22nd, sir.
20 seconds. Okay, it's fine, right? So only we need to do the previous part, right? So once I finish this part, I will come back. Okay. So
Okay.
right. So this is enough for today. Let's meet on. I'll update the group about the times and the dates, right? Mostly Saturday, Thursday, and Saturday, right? Okay. Thank you for the participation. Bye. Sarna, God bless.
Thank you,
Also,
sir.
thank you
Okay.
so much.